and welcome to this fresh episode of Africa Business Weekly as we bring you highlights of some of the biggest conversations in the world of business this week. I'm Aki Obakeye. Now from West Africa, we throw the spotlight to the latest developments in Niger as ECOWAS Army chiefs conclude their two-day meetings in Ghana today with deliberations focusing on over the next line of action to restore democracy in Niger. And from our East Africa desk, we bring you an exclusive with the Secretary General of the United Nations Conference on Trade and Development on prospects for Africa in global supply chains. But let's get right into the conversations for this week as Palesa is on standby for regional updates from South Africa. Hello, Palesa.
We begin with an exciting conversation about travel connections reignited between Hong Kong and Johannesburg. CNBC Africa's Fifi Peters spoke to Rakesh Raika, Regional General Manager for South Asia and MEA at Cathay Pacific, about the airlines. Let's listen in for more.
We've been wanting to get back to South Africa through the pandemic. The pandemic delayed us.
Sure.
So as soon as we were able to marshal our resources and we wanted to get back into South Africa, that's exactly what we've done. And the timing has been perfect because the reception from South Africa has been fantastic. This first flight that went off today had a full load, which means
so that's around 280 people.
That's correct.
Okay.
That's correct.
In terms of that, though, I do understand that the company did go on a. You advertised, you announced that you were coming back to market earlier on in March, and you were allowed customers to book prior. What are the numbers telling you about what kind of demand you could expect to see for that route going forward?
Yeah, the initial forecast that we had based on the past records, the demand was slow to pick up initially, but we were here in March. Everything was set in the system, and then the demand started picking up, and that's what we've seen actually across our markets. The demand pickup is much slower, but much faster, closer to the date of flight.
Sure.
So when you look at it now, and I look back in March, we thought this flight may not go very full, and the flight has actually turned out to be an absolute success.
Sure. That's quite interesting, though, because it also leads to the question as to what kind of passengers are on the flight. I mean, we have seen a big pickup in just leisure tourism, as it were. People tired of the lockdowns, they are prioritizing spending on experiences over other things. But from a South African perspective, there has been a slow build-up in business travel, as it were, to the same degree that we are seeing the recovery in leisure. So maybe can you give us the profile of the customer that you are seeing on this particular route? Are we talking about mostly business travelers, leisure travelers, or a combination of the two?
I would say it's mainly ethnic travelers and those travelers who are going to visit friends and relatives. So that would be the major chunk. And we've also seen a great pickup on the leisure side, especially to Asia. Business, as you rightly said, and it's across the network, has been slow to pick up, and likewise in South Africa also it's slower to pick up. But we are seeing now the small and medium enterprises, the owners of these business units are now starting back to travel again.
Okay, and how have you come back? Because the pandemic, it put a lot of strain on the aviation sector, perhaps a lot more than other sectors, and there was a lot of cost cutting that was involved. I mean, I fly nowadays, and some international flights don't even offer toothbrushes and toothpaste for economy travelers, and there has been a restriction in the type of food that has been served, just as a measure to cut down on costs. As Cathay Pacific, if you compare your route now compared to the pandemic, what's changed?
Actually, what's changed, we reorganized ourselves. I think we've made us a bit smaller in that sense, but we have not cut corners when it comes to customers. In fact, on the other,
get a toothbrush.
You're going to get everything. Yeah. So in fact, we've elevated our services when it comes to customers, because that's the most important aspect. We are here because the customers are here, and customers are important to us. So that's where we've actually invested much more than what we have invested earlier.
Okay, and another big dynamic that has played out in the past 3 years is the fact that the price of everything has gotten a lot more. Fuel, labor, utility and your administrative expenses. So how has that translated into ticket pricing? If you can just give us a sense of what ticket price inflation is looking like right now.
The ticket prices, you're right, are slightly higher than they were in pre-pandemic. A lot of reasons for that. I think the most important reason is the function of demand and supply.
For a focus on regional growth concerns in West Africa, CNBC Africa's Godfrey Mutizwa spoke to Michelle Mwanga, Minister of Labour, Social Protection, Employment and Vocational Training at Central Africa Republic on the sidelines of the Africa Human Capital Heads of State Summit. Let's watch for more.
À mon humble avis, je pense que dans un premier temps, il faut travailler sur le mental, c'est-à-dire le changement de mentalité, le mindset. Pourquoi le mindset? Parce que notre pays a traversé pendant des années des crises. Donc, il y a eu beaucoup de violence. Il y a eu beaucoup de... L'éducation a été presque inexistante. Donc, il est vraiment primordial de travailler sur le mental, de redonner confiance à la population et à la jeunesse. Les préparer pour recevoir une formation. Ça, c'est une première chose. La deuxième chose, en fait, c'est la volonté politique, c'est la gouvernance, le leadership. Et pour ça, moi, je pense qu'on est bien parti parce que nous avons notre leader qui est très engagé. Le président de la République, professeur Faustin Archange-Touadéra, non seulement c'est parce qu'il est professeur, c'est un enseignant, et il met vraiment l'accent sur tout ce qui est formation. Et je pense que nous sommes bien partis sur cet aspect. Après cela, moi je pense que l'ambition, la volonté, et après la volonté, il faut bien, pour investir dans le capital humain, il faut des moyens. Donc il faut les ressources. L'Afrique regorge beaucoup de ressources, mais hélas, nous n'arrivons pas à profiter de nos ressources. Et je vais en profiter pour, est-ce que clôturer? J'en sais rien. On a suivi l'intervention de Madame la Présidente de la République unie de Tanzanie. On a suivi également l'intervention de Madame Gracia. Ces deux grandes dames ont dit beaucoup de choses. Ce que j'ai retenu dans ce qu'elles ont dit, qu'il faut joindre la parole à l'action. Yeah. Et aussi, elles ont relevé, surtout Gracia, d'après ce qu'elle a dit, ça fait 40 ans qu'elle parle des mêmes problèmes. Donc, elle a demandé même à la Banque mondiale de faire autrement. De nous laisser l'Afrique, dans 30 ans, l'Afrique sera capable de développer son capital humain et de vivre décemment. Nos enfants n'auront plus besoin d'aller ailleurs pour essayer de chercher des opportunités. Nous avons le devoir d'offrir des opportunités à nos jeunes, à nos populations. Nous les formons, c'est très bien, mais ça ne doit pas s'arrêter à la formation. Après la formation, il faut que nous préparons un environnement adéquat pour qu'ils puissent se réaliser, qu'ils puissent s'épanouir. Et donc, le point important, c'est l'opportunité que nous avons le devoir, et ça, c'est une responsabilité collective. Chacun doit jouer son rôle.
Sure. Is there any work you're carrying out as the Central African Republic to try to get the private sector more involved in helping create employment for youth, helping create employment for women?
Le secteur, en tant que ministre du Travail, de l'Emploi, de la protection sociale et de la formation professionnelle, je cultive une relation, une collaboration avec le secteur privé. Parce que hier, je disais même dans mon intervention que c'est un atout de favoriser le partenariat public-privé. Et dans notre projet PADA, ce sont les entreprises, c'est-à-dire le secteur privé.
And that's all from my side. It's back to you.
Many thanks for the update there, Palesa. Up next now, we now cross over to East Africa for some content from Sarah. It's over to you.
Well, thank you, Akin. Coffee from the African continent accounts for around 12% of the world's production of coffee beans. There has been a growing view among players in the sector that the continent has the potential to reap considerable dividends from the value addition to its coffee beans. We spoke to Joseph Igogo for more.
Export at least every 3 months, 320 bags, at least like one container, which is 19.6 tons every 3 months. And it's just because that the coffee requires a lot of resources in terms, because one bag of coffee is around 540, 560 in Nairobi. For you to get now to 320 bags, you can do the calculation, you can do the arithmetic. You see it's around, in Kenya shillings, around 18 million. So that we are able to export from Kenya. And our main market is in US. But then we have been trying to open up new markets. Europe is a good market. We are trying to certify their requirements for exports. We have also trying to look into a market in Dubai through the DMCC, the Dubai Multi-Commodities Station. Then we have also tried to look at the market in Southeast Asia as an emerging market. In Malaysia, we are trying to set a base in Malaysia and to have our coffee there. Of course, I did a trip to Malaysia 2 weeks ago, and I can tell you the coffee from East Africa is not available. And guys there are really demanding that we take our coffee there. So the opportunity for us to do business in the coffee, with the coffee commodity is there. It's something that we can do, and the demand continues to increase as countries basically consume it. Every day, there are people who consume 6 cups of coffee in a day. So the demand for coffee and for good coffee is on a trajectory.
Yeah. When you say the demand is there and it's constantly increasing, is Africa, looking at the different markets that farm and export coffee, are we getting the value from it as we deserve? For example, looking at the coffee is mainly exported as a raw produce. How can we add value to it?
That's a wonderful question, Fiona, and I can tell you very much that one, we don't even need to look at the European market to export our coffee. Africa has the numbers to consume what we produce. If you are to basically just consume 30–40% of our coffee, it's enough to give us our value. So the first market will be basically Africa. So, but anyway, whatever is happening today is that we're exporting a lot of coffee. But to me, we are not getting the real value. Because if you do a quick calculation, the coffee farmer on average in Kenya, how we grade, I'll tell you how we grade it in Kenya. The best coffee is now, we say the quality in terms of AA Kenya, the A Kenya grade, which maybe here is grade 1, A1. So basically, the farmer gets around $6–7 maybe at maximum in terms of the price for 1 kg, because coffee is traded in dollars. But if you go look at the entire value chain of those people who are involved now in the entire value chain, the last person to take that cup of coffee pays around, for a kg, they pay around $300. So you can see the differentials. There's a big gap between what the producer gets and what the consumer pays. So that value chain is what we are not getting real value for it. But then, back to your question on what needs to be done. We must open Africa for trade among ourselves. It is very expensive for me to transport a commodity from Nairobi to Kigali. It's even easier to take that commodity to US. It will be cheaper. I recently have a client in Harare, and for me to take the product, it was 500 kilograms of coffee, half a ton of coffee, roasted coffee in Nairobi. To take that coffee to him in Harare.
African economies can become major participants in the global supply chains by harnessing their vast resources of materials needed by high technology sectors and their own growing consumer markets. This is according to a new report by UNCTAD. And for more, we had a conversation with the Secretary General, Rebecca Greenspan, for more.
Take this opportunity forward. One is that we will need technology, we will need finance, and we will need to invest in human resources to have the right capacities to be able to include Africa in the global supply chains with more value added than the one they have had until now.
What would you say are the opportunities that Africa can leverage on to contribute to global supply chains? What are some of these opportunities or potentials that are there on the continent?
Well, the first thing is that you have the raw materials. You know, if we look at the raw materials in Africa, Africa has, for renewable energy, for example, Africa is home to 48% of the world reserves in cobalt and manganese. It is 80% of the world reserves on phosphate rock that is needed for fertilizers and for batteries, and 92% of the world reserves in platinum group metals. So as you can understand, there is a huge opportunity there because precisely this continent has the raw materials for the energy transition, for the renewable energy market. That's first. Second is the demographic. They have a young population coming in, a population that is more digital, that is more innovative. There is technology, and at the same time, you know, they have the aggregate demand for the future. And thirdly is the African Continental Free Trade Area. That is a huge opportunity for investment to scale in the African continent.
If we have all these things working and going for Africa, then why are we not taking advantage of, you know, this that is there on the continent, as you mentioned, the raw materials, the demographic, the AFCFTA?
Yes, I think that things are changing. Really, I think that you see a turning point in Africa right now. You go to governments that are putting forward a more long-term view strategy. I am in Kenya, where we are launching this report precisely today, and you have here the 2030 vision that is also a continuation of the former government. So it's representing much more a national project than only a party project. And I think that that is key, yes, because without a long-term vision, it's impossible to build and to have the building blocks that you need for a strategy like this to be successful.
I mean, we're going to go back to that report that you're launching today, but let me go back to the AFCFTA that you mentioned earlier. How can it be leveraged, especially by the small African farms, to help them access the global supply chains?
Yeah, that's a very important question and very central to an inclusive development, yes? And part of what we say is that the small and medium-sized enterprises cannot get into the global value chain because they don't have the financing to do that. We need much more capital financing from the buyers and in the global chain, and we need also capacity for overdrafts, for example, that are used in many countries for the small and medium-sized enterprises, more flexibility in the regulation for the small and medium enterprises to be able to come to the global chain.
That's all from East Africa this week. It's back to you.
Thanks, Sarah. We now bring you our regional focus back to West Africa, as ECOWAS Army chiefs conclude their two-day meetings in Accra to coordinate a possible intervention over Niger's coup. Now, this follows Wednesday's report by the junta saying 17 of its soldiers were killed in an ambush by insurgents near its borders with Burkina Faso. Dennis Amakri, CEO of Zoomland Security Solutions, shares some insights while reiterating the need for diplomacy.
I think we are shifting gradually towards diplomacy. I really don't think that the initial point of attacking Niger Republic, the junta who planned the coup is a very, very good idea. And from all the public opinions that we've gathered together from other members of the ECOWAS, I think the movement is not seriously towards attacking the junta.
So you don't see any sort of aggression coming from these meetings here at this point in time?
If there is any type of aggression, it will be first in history. Well, not first in history, but first in recent times, where we have the regional body going after coupists. Remember that we have 3 different countries, Burkina Faso, Mali, Guinea, all under military rule. And we've not attacked those ones. So going to attack Niger, I think has to be looked into more closely, because many people have said it, that it's not just ECOWAS trying to reinstall democracy, but it's a proxy war which ECOWAS is being manipulated into by the superpowers.
Talking about the role of superpowers now, for the fact that we also understand the importance of Niger's uranium and oil reserves to the global community, that's on one hand. But let's talk about looking through things now, the lines with microscopic lens. We had Chadian President Idris Deby meet with the junta-appointed Prime Minister Ali Zain earlier on Tuesday. And for you, what does that really mean? What does this entail? Is this a show of solidarity? What are the questions to be asked here?
Yeah, what Idris Deby is doing right now is one that Nigeria would have done, because you see, good neighborliness in international relationship, good neighborliness is key, you know, and he has taken it further by going in there, talking to them. And of course, was it yesterday or 2 days ago, the commander of the military multinational joint task force that has been put up fighting terrorists and insurgents, the commander went to N'Djamena, and then of course met with their own defense minister, and discussed how they could continue cooperating with each other. So I think good neighborliness, I think, is the answer. You cannot afford to have a war across because of cultural and religious relationships that existed for hundreds of years.
Up next, we'll bring you an exclusive with the Chief Executive Officer of Seplat Energy, Roger Brown, who says the annual gas project will be completed by the end of this year, with prospects of a new gas plant in Sapele in Delta State to be ready by 2024, as the company focuses on gas processing and monetizing resources for accessible and affordable energy access for Nigerians. He also looks forward to closing the deal on Mobil producing Nigeria under this new administration. Take a listen.
Our results for the first half. The top line were slightly over $500 million, so it's a strong 6 months performance and revenue. And I look at then in terms of the profit lines, the $180 million of operating profit. I've looked at EBITDA numbers, which is what we sometimes measure ourselves on, which is earnings before interest tax. That was about $250 million. So it's very, very strong numbers. And what drives that? It's obviously a strong production from our assets, where we've got 7 blocks onshore, and that then contributes to that revenue and the profits. But also the oil price. And the oil price was on the edge of about almost $80 on average for the 6 months. If I compare it to the 6 months from last year, in the equivalent period, it dropped by $30. But actually, if you look at our results, they're about 3% up on prior years. So it shows you how strong we are in producing. And that's largely to do with the fact that we have multiple pipelines. So we have a new pipeline in our western assets, which is the Mukbi line, and that's actually then paying dividends. So it's actually shoring up our volumes that are going through the terminals, and those ultimately get monetized.
Now, in terms of cost-cutting measures, now let's talk about some of the strategies you're deploying at this point in time, because really now, in terms of beating the odds, in terms of the operating environment, everyone is looking towards reducing cost. High inflation is also one of the issues that is fueling this strategy, really.
Yeah, but Seplat's a low-cost producer, relatively speaking. You know, if we look at all our line items, you know, first of all, we look through efficiency. So in this energy space, you need to be efficient in what you're doing. So therefore, our drilling costs, we're driving those down. Our operating costs, obviously, we're trying to drive those down year on year, and we are being successful around that. A big factor of operating costs is obviously in the unit basis is your production. So actually higher production, then you have more production to share the costs over. So we really focus on that. It's like almost like a microscope. We look at it in terms of driving that down, narrow it down, because it's very important that you are the lowest half, or at least hopefully the lowest quarter production company. So therefore, when you got a cycle in the oil price, you can't predict that. So we can't control that, but what we can control is our costs. And that's really yielding dividends in terms of the profits, which are up. And if I look at our gas business, which is something we're very passionate about, now our gas business is a really solid bottom line producer in terms of top line revenues, but also bottom line profits.
Now let's also bring into focus now, I know back in 2020, this was described as the singular project with the transformative ability to transform the energy sector, the landscape here in Niger. What's the update here?
Well, let me just talk just briefly before the update. You know, if you look at the gas business, it's done through hubs. So at Oben, we have a big gas plant, and that's at Oben Hub, and that supplies gas into Lagos and Abuja, which is where the most demand is. Then in the east, we're creating a hub, and then we call that ANO, and we're doing it alongside government. And then there's a pipeline connecting the east and the west called the UB3 pipeline. Now that gas plant is a game-changing project, because then it's monetizing big gas resources in the east and taking it to where the demand is. That plant, we're looking to complete that this year. We're slightly delayed because we're relying on third-party pipelines, one that's going to connect into the UB3 and then the UB3 itself. But once that's on stream, then obviously the gas will be coming to where demand is. And then there's what we call condensate. So there's liquid in the gas when the gas gets dried, and then that gets monetized. So you've got two revenue streams, which are quite critical. Plus that gas business is a very long term.
On that note, it's a wrap on this week's show. Thanks, Palesa and Sarah, for the regional updates. Join us same time next week for even more exciting content on Africa Business Weekly. I'm Akin Obake. Do enjoy your weekend.